Good morning, everyone. Welcome. I am Rashmi Chanduraj, the co-founder of Sira, and I'm so glad for all of you to be here this Saturday morning. Before we actually start today's session, I kind of want to pause for a moment, especially after hearing of the recent, Air India plane crash. I mean, it's truly heartbreaking. My thoughts are with, everyone who's impacted. But it's actually moments like these that make us sort of stop and think, right? It's something unexpected, happened like in a flash. But it's a question that we need to ask, would I be ready? Would, my family be okay should this happen, to me? Or, it's not so much the emotional part, it's actually the financial aspect of it, right? I mean, we saw this during COVID way too many times. So many families, especially women, who were suddenly left, trying to figure things out for themselves. And often really, without any support, or backup. Whether it's health crisis, job loss, change in a life stage, the truth is most of us, are sort of caught off guard. And, really what it's because we're not that we're careless. It's really because we're not prepared or not taught about this. We are all taught about managing homes, caring for others, literally stretching every rupee. But when it comes to planning, investing, and building wealth, we as women are kind of left out from that conversation. I'll be honest, I've been in that place. I've earned, I've spent, I save, but I feel a little out of control when it comes to investing. It was never really sort of, inherent. I honestly didn't even know sort of the difference between money and finances and what that, meant. Like money is what you have, correct? Versus finances, or finances are, what you do with it. Money is like obviously what is, balance in your account or, cash in your wallet. Finance is how you plan and grow and use this money to create stability, freedom, choice. That said, uh, the one sort of, insight that changed everything for me, right? We created this session really, to kind of bring that clarity to all of you. And, I'm really, really, excited about the speaker that we have. So I'm going to pass it off to Deepa to share a little bit more about, this session.
Hi, I'm Deepa. Thank you, Rashmi, co-founder of Sira, a platform where we empower women. And today we have with us Pankaj, a seasoned chartered accountant, and with 25 years of experience. And he's a partner with Guru Jana, one of the most biggest chartered accountancy firm in India. And Pankaj is very passionate about bringing financial literacy, making it accessible to everyone, especially women. And he has conducted numerous workshops, webinars focused on making financial knowledge accessible. During pandemic, he also had the startup of EdTech company support this mission. Today, he's also currently writing a book on financial literacy. I'm so excited to have you here, Pankaj, today, and I can't wait for you to start the session. Thank you for joining us.
Hey, thank you, Deepa and Rashmi, for giving this opportunity to me. And I welcome all the participants on the board. And I also, at the same time, congratulate both of you to start this initiative, which is absolutely in need of our. And this session truly has become kind of a global because Rashmi sitting in US, Deepa sitting in Bangalore, and I'm sitting in Pune conducting this session for you all. So let's just begin with the topic today. Mm, I'll share my screen meanwhile, and please let me know if you are able to see the screen. Is it visible
Yeah.
to all of you? One
Yeah.
second. Okay. Okay. So the topic today we have is financial literacy. Is it really needed? The topic which is quite important, but not very urgent. And that's the reason the whole title is it really needed? And in the process of this session, we'll try to get the answer of the same for the same, is it really needed? And if yes, then how do we attain the financial literacy? You know, but as we start the session, and I want to keep it as a conversational. I don't want it as a kind of a lecture or a kind of a one-way talk. So you all can access to your chat, and we'll keep it conversational. You of course can ask questions. At the end of it, we have a question answer session also. But let's try to discuss with each other through this technical thing that we have called a chat, and through that let us see how can we develop this session. So see, financial literacy or money management or finance management, that we keep on doing every now and then, and everyone of us around us, you know everyone handles money, everyone deals with money, everyone keep on taking financial decision every now and then. But are we taking financially intelligent decision? That is extremely important. And what is financial literacy is all about? It's taking financially intelligent decision. So it's a money management or finance management that we need to be aware of. But as we start the session, I want to know from you what money means for you. And this is for Deepa and Rashmi too. So want to know what money means to you. Can you put it in a chat and let me know? Let me see if I can access to the chat and let you know your answers.
So the
Meanwhile, Deepa and Rashmi,
participants
I think
too.
you have
Yeah.
access, so you can answer this on kind of camera also.
For
And if
me,
there is
it's
anyone replying, you can reply to me. Yes, Deepa, please.
freedom. I would say freedom to live life the way I would want to in my own terms. That is what
Okay.
it would mean. Yeah.
Okay, freedom. Rashmi, can I hear from you?
Yeah, so I said, I think it's like just transactional, right? Like you have money, you're able to use it to go, purchase whatever,
Okay.
but yeah.
Okay, okay, okay. Or few of you, it can be security. For Deepa, it is freedom. Few of them, it can be mean for attaining their financial goals. So actually, this money aspect has a different meaning for different people. So before we start into the whole discussion, already Rashmi has given the perspective of the session. Rashmi already gave the whole reason for the session, but we'll try to understand with one more thing, and let us see what is this financial literacy is all about us, how literate or how aware we are, and then we'll try to develop this session. So I'll just stop share for a moment here and share a video with you all. Let me just give me a moment. You're able to see the video on your screen? I mean, I'm yet to start, but
Yes.
the okay, so this is 4-minute video. Let us just go through it and enjoy this video, experience this video, feel this video, and after this video, we'll take the session ahead. And this is absolutely bang on the topic that we are going to discuss today. So let us just go through this video.
Hello, everyone. Thank you so much for coming to help us conduct this experiment today. We were of different ages. We were made to stand in a line. Now, I'm going to ask you a bunch of questions. If your answer is a yes, step forward. If it's a no, please step back. Here goes. Ready? Did you learn how to ride a bicycle before the age of 10? Did you learn music in school? Did you take any lessons in sports? And no, video games are not a sport, even if it has the word game in it. Did you learn how to iron your clothes while still in school? Take a step forward. If not, take a step back. If you can make tea or breakfast, not just for yourselves, please step forward. If not, take a step back. At the beginning, I think the questions were more general. People were still going forward and backward. Questions like it was funny to see, like the cooking question. There were a lot of men who went ahead, and there were women who were going behind. Do you usually make all the household bill payments yourself? Do you know the circle rate in your area? Do you know the price of gold today? Do you know the exact breakup of your salary? As the questions unfolded, the stark difference came out visibly. Do you know the details of the financial documents you're asked to sign? Have you bought a vehicle in your own name without consulting anybody? Have you bought insurance policies unassisted? Do you watch or follow the budget? Like you think you're doing okay, but then you're like, okay, these are kind of important things that I don't look at. Do you manage your own finances and earnings unassisted? Do you know how to invest in mutual funds? Do you know the difference between a mutual fund and an SIP? Do you make the investments for your family members or your spouse? Do you file your own income tax return? Now, everyone who's in front, could you please turn around and look behind you? Initially, when you guys started, there wasn't such a big gap. My question is, when did this gap start to occur? The minute the questions became about managing money, gap between men and women became very clear in it. Women handling certain responsibilities regarding their own life, which were always passed on to someone else in the family or the man. There was a slight unfairness I realized at that time. But at that point, it seemed normal. I was upset. I wanted to be at the front of the line. It's like, why don't I know this? Why am I not confident enough to say, yes, I am able to understand this? It was quite an eye opener for me because I always depended on the men of the family to take care of my investments and, plan my future. I felt that obviously men are more into it than women. So eventually, I did expect the gap to be there. For the years growing up, there were certain very traditionally masculine tropes that were assigned for him and certain traditionally feminine tropes that were assigned for me. For women, it's practically debarred to learn to know and to focus on money. I wish I had known from the beginning of my childhood and like kind of thought about that I would be doing so much better. Just actionable measures is what we want really.
Let's be financially equal, and it's time to just so
That's a really powerful video.
yeah, thank you so much. Time to be equal and eliminate the financial inequality amongst the genders. So I'll just share my
I
screen
think you'll have
again.
to go back to sharing your screen. Yeah.
Yeah, that's what I'm doing. Okay. So the whole session will immediately start with the session with the background of this video. Do you feel really need to be financially literate is what we need to know. And what is financial literacy is all about, as I said, your ability to take financially intelligent decisions. We keep on taking financial decisions every now and then, but of course, to a large extent, the major financial decisions in the family is being taken by the male. When we are child, it was being taken by our parents, especially that to father. And if you are married now, it is being taken by your husband. So yes, small financial decision like paying salary to maid, paying some GPay or phone pay, those small things you are managing, you are handling. But the major financial decisions, say like whether to buy home currently or not, whether shall we rent out the home or shall we buy on a loan, shall we buy car now or not, shall we go on a long holidays of 15 days into Europe, or shall we curtail it to 3 days in kind of Kerala and enjoy it over there. All those financial decisions to a large extent is being handled by the male members in the family, and unfortunately girls and women are not part of it. um, so what is objective of this session, friends, is of course in 40-45 minutes it's very difficult to make you completely financial literate, but the whole objective of this session is make you interested, make you excited about knowing or learning financial literacy. you know um, uh, I was reading somewhere that being financially uneducated is the most expensive thing that you can do to yourself. You just cannot afford to be financially uneducated in today's era. So the objective of the whole session is make you excited or make you little more interested in this subject called financial literacy or financial awareness. And what are the common reasons for being financially illiterate? Typically, why women don't take interest into financial literacy or this financial decision? Can any one of you answer me in the chat, or even Deepa or Rashmi can answer here? What are the typical reasons why you don't get into that financial aspects of the family? Is it a kind of a hindrance from the family members, or is it anything else? Want to know from you. You can put it in a chat, or you can let me know. I'm just opening my chat box. Money is not talked about is what Deepa is saying. Okay. Okay. Anything else? I request members to please be little more conversational. So then we can enjoy this session with each other, intimidating. Right, absolutely. Okay, few of the reasons what I had thought of, why this is not very interesting topic for women or girls. Typically married woman, my husband is handling everything, or for girls, my father is handling everything. It doesn't come to me, so why should I kind of even get into it? Already, I'm so much occupied with my own work, kids, maids, and so many things. Yeah, or सर पे क्यों लेके रखने का है? Someone else is already managing it, or I don't earn, so I don't know. Don't need to know. I mean, family members are taking care of it, earning members of the family are taking care of it. मैं नहीं कमाती हूँ, I don't earn, so why should I get into it? Or another thing can be, investing is very risky, and it is not me, it is not for me. अगर कुछ गलत हो गया, if some mistake happened, and we keep on hearing about that financial fraud, someone asked you, called you for your bank details, for your OTP, someone from your known circle gave that OTP and kind of got cheated for a lot of amount. He got trapped into that financial frauds, so that's risky and I don't want to get into it. Or at the end of the day, it's not my cup of tea. Investing, financial aspect, I don't enjoy, or it's not my cup of tea. Can be different reasons why we are not financially aware. I want to use the word aware, in fact, because literacy is a little kind of a hitting thing. It's not about we are illiterate as such, but we are not completely aware about financial aspect that is happening around us. And want want you to know this also, that investment and saving patterns have changed from our grandmothers or mothers time. I remember my grandmother used to say, she used to stay in a small village, and whatever small or other savings she has, she used to keep it in that dabba, and keep it accumulating. And whenever there is some emergency or some other thing, she used to gather all the things and give it to the dadaji or my grandfather in case of the emergency. And that was the pattern of saving. Even my mother, things were not changed much in 1980s or 1990s or 2000 as such, but today things have changed a lot, friends, because the earning parameters have changed, the financial goals have changed. My grandmother, or for that matter even my mother, would not have even dreamt to go on European holidays for 15 days, but we have those kind of dreams. They would not have dreamt to have a house of say 2 crores or 3 crores Indian rupees, but we do have this kind of dreams. So things have changed a lot, and so do the reason, or so the whole reason for being financially literate has also changed. We cannot afford
Pankaj,
financially literate. Yes, Deepa, please.
Yeah, I just wanted to add there that, traditionally, right, I mean, we were asked to invest in gold or, put in FDs, right? Or if you have too much money, go buy a house. So even that, I mean, while having the conversation with you, you said is a very, very bad idea. So, I just wanted
Exactly.
to.
Exactly, exactly. And there is where I'm coming at. So there are two different financial concepts you must have heard of, but I'm not sure whether you are exactly knowing what it means, income versus wealth. So there are two different concepts. These are two different things, but interrelated things, things which are relating to each other. Income is something which we earn on a regular basis, say through my salary, through the interest on the FD. As Deepa said, I have made some FDs and interest I'm getting out of it, or I have bought a house and given it on a rent. That is the income that I'm getting. So these are the income parameters, income things, and wealth is something which we create out of the savings that we make out of the income. Right, we make certain income, and then out of that we do our household expenses, we pay our EMIs, we pay the school fees, we incur the medical expenses, and whatever saving is there, if we invest that saving into in a quite an intelligent manner, we can really create a very good wealth. So I mean, they says that your income or earning alone won't be enough to achieve your financial goals. We have different financial goals, we have very good financial goals, but your earning enough won't be able to achieve your financial goals. And as Deepa talked about FDs or gold, I'll be coming to the different things that we can help in creating the wealth, that can help building your wealth. But we need to know that your income or earning alone won't be able enough to achieve your financial goals. And again, stop share this particular thing and want to share one Excel sheet that I have kind of created to this to make you aware about this. Are you able to see the Excel on your screen? You're able to see
Yeah.
that? Okay, okay. So I've just taken an example, and what I'm trying to say here is your income alone won't be able to achieve your financial goal. See, your salary is 2 lakh rupees per month, and your household expenses are 60,000. Your grocery, medical bills, school education, tuition fees, and everything else. You're paying EMIs of say 90,000 rupees, car EMI, house EMI, and whatever different things. You're ending up having savings of 50,000 rupees. So your saving will be 50,000 rupees. Now, what is extremely important is what you do with this saving. And in my professional practice of 25 years, what I realized is, and not only for girls or women, even for businessmen, even for people who are into earning money, they give lot of attention. They are very much into earning this money. Say, for here we are taking example of salary. For someone it is income out of their business, earnings out of their business. So they give lot of attention, lot of focus to earning that money. But very less attention is being given in creating wealth out of the savings that were created through this earnings or income. And these are the major reason why people are not able to create the wealth kind of they are earning. You need not to earn a lot of money to create a good wealth. Only thing is, you need to be financially intelligent on understanding how to use this savings. And if you see, if I keep on only accumulating this saving of 50,000 per month, in a year's time I'll accumulate 60,000 6 lakh rupees. Say in 10 years time, this 6 lakh will become 60 lakh rupees, and in 20 years time, this 50,000 per month saving in 20 years time will become 1.2 crore rupees in 20 years time. If I'm simply keep on accumulating the way my grandmother was doing it. But if you financially take little intelligent decision, if you invest it smartly, I'll tell you what miracle it can create. So I'm still trying to tell you how the financially intelligent decision can completely change your life. And through this session, I'm trying to give you a few practical example, practical case studies through which people have created very good amount of wealth, and just because they were financially little literate, financially aware, what a magic or what a miracle they have attained. So I'm again sharing my screen over here, and trying to show you something interesting. I hope many of you are aware about mutual funds or SIP. Mutual funds or SIP is mutual funds. It's investment by AMCs. AMCs is asset management companies which invest money taken from you into different stock markets, different shares of different companies, say Infosys, L&T, SBA, and so on and so forth. So, and if you make a regular investment into this mutual fund, it is called as SIP, Systematic Investment Plan. I'm sure many of you all already would be aware about it. So I'm just taking a small example over here. So this 50,000 rupees, what we're discussing, if I invest it, say for 20 years, the example we had taken over is a 20 years, just accumulating that, we would have created 1.2 crore rupees of a fund. But if I invest it for 20 years and my expected rate of return is 15%, rate of return is what? If I invest 100 rupees, after a year, I get 115 rupees. So 15 rupees is a return on my investment. Typically, as Deepa said, FDs, Deepa mentioned about FDs. In FD, typically in India, we get say 7 or 8% of return. If I invest 100 rupees, I get 7 or 8 rupees interest on that FD. Of course, there is income tax involved into that. There is inflation involved into that. I'll come to that. Why investing into FDs are not a very good idea as such. But continuing with this example, if the 50,000 is amount I invest into SIP for 20 years and my expected return of rate of return is 15%, which is actually a return of stock market over the period of last 20 years. So this is not some imaginary returns. This is the return given by the stock market over the period of last 20 years. So 15% of return of investment. If you see on the right hand side of the screen, your investment is 1.2 crore rupees. Same as we seen in that Excel sheet. 1.2 crore is the investment, but your estimated return is 3.79 crore and your fund will become 5 crore rupees. This 1.2 crore which you would have simply kept on accumulating can become 5 crore rupees. That is the magic of investment. That is the magic of being little financially literate and financial uh, intelligent decision. So I hope I'm able to give you a little perspective of why how this investment and how this things are really important and why you need to be little aware about it. Coming back to our slides, your income or earning alone won't enough to achieve your financial goals. So whatever different financial goals you have to work on how to use your saving. I'm thinking that few of you joining here must been working with someone, must been having your own business, and few of you must been housewives also. So either you will have certain kind of savings through your earnings or your income, or your family must be having you some savings. But ultimately it's your family money, and if you along with the decision makers in the family
Sorry, Rashmi is the
Yeah, I think,
he froze,
he's,
right? Yeah.
yeah. While we're waiting, I think,
uh,
oh,
uh,
there, he's back on.
yeah, sorry. So the typical no hindrances, somewhere internet got switched off. So I shifted to my personal mobile hotspot immediately, and I hope it should get through us
Yeah,
properly
yeah,
in
you're
this
back
session.
on.
You're bang on, right? So why this decisions about finances you should be able to take, you should be little aware about. And why I'm telling this to you as a girls or female woman in the family. I have seen through my clients that many of those clients simply invest this amount in something, park that amount, this saving which we are talking about, they park it somewhere without even seeing towards it, that what is the return it is giving, is it giving good returns, whether the returns are at par with the market, at par with the industry or not, so they don't have time even to through check the savings and check the investment and check the performance of the investment. And there is where you all can play a very important roles, not only your own savings or investment, but your family savings also, so uh, how can you create a wealth? I'll give you one practical example, and why I'm giving it to you is to make you little more excited or interested in how it can create miracles. And the example that I'm going to take is actual real example of my cousin, and how he achieved a miraculous thing through this financial awareness, through this financial decisions, and actually miraculous decision. Many of our youngsters typically have a dream to retire early. This is the in thing currently, that we want to retire early. We don't want to work for 60, 65 years like our fathers or grandfathers. I want to retire early and I want to kind of enjoy the life, enjoy my dreams. And I read a very beautiful quote about retirement, that this is that it's not what age you want to retire at. It's all about what income you want to retire at, because money matters a lot. I mean, we keep on hearing that money is not everything. Money doesn't cannot buy everything. Money is not everything in life and all that. But I also read a very beautiful statement again about it, that yes, money is not about everything, but make sure that you earn enough before talking this nonsense. you know because there are so many things only money can do. All your financial things can be achieved only through money, only through money. So we need to earn enough to achieve our financial goals. And I'll tell you a practical example, a real life example, how someone attained a miraculous financial independence through this good decision, to financially aware decisions. So I have my cousin called Mukund who stays in Amravati, in a part of Maharashtra called Vidarbha. And he's a 25-year-old. He started his business quite early. He didn't do good education. He did just graduation, but he was very good into business. He started his business. I'll just stop share this and want to share something else also. But meanwhile, I'll just so he started his own business and started earning well very soon. And what he did is, from age of 25 years, he started investing into mutual fund SIPs. So what he started is, from 25 years, he started investing 1.5 lakh rupees per month in his SIPs. And I'll tell you what miraculous result he has achieved. What he's doing right now, he's just 40 years old. And this guy is already retired from the business. He's taken complete retired from business. Both his sons are very good chess masters. He was not able to give time to his sons chess competitions. Now what he is doing is simply 20 days of a month traveling with his kids in different parts of India and globe to attend the chess competitions and all that. I mean, he's living the kind of life he wanted to live. No more financial kind of stress, challenges, business challenge and all that. And how he achieved it, two things I want to tell you about this investment. One is called SIP. We already heard about it, systematically investment plan. What wealth he accumulated through that 1.5 lakh investment for 15 years. I'll just take you through my screen again. You know, So what he did is, I'm just taking this example, 1,50,000 rupees, his age was 25 years and he retired at 40 years. So he made an investment for 15 years of that SIP and rate of 15%. So 1,50,000 for 15% and for 15 years. Now you can see, and this is actual math. I mean, this is not a magic as such. He has got accumulated wealth of 7.5 crore rupees. 7.5 crore wealth he has accumulated. Now we can wonder how it only amount of 7.5 crore rupees in hand he retired, because as Deepa said, FD is one of the investment that we have, and typically on FDs in India we get a return of 7 or 7.5%. So on 7.5 crore, even if you invest in FD, he will get 7% interest. And on that interest, again, he has to pay 30% income tax. So what typically he will live left with is 4 or 5% of the amount every year. and that won't be sufficient to take care of his family expenses, his financial goals, his financial dreams. Then how he achieved that? And that's the reason Deepa and me were discussing is FD is not a really very good investment as such, or typically it is called that it is not even an investment, because as I said, 7% interest rate, and after income tax, it ends up with 5% in your hand. And today, even inflation is increasing at 6 to 7%. So FD has become from 100 rupees to 105 rupees at 5% return, and inflation unfortunately is increasing at 6 to 7%. What is inflation? Inflation is nothing but increasing buying power of money. So, for example, you were able to buy, say, one vegetable at, say, 50 rupees per kg 2 years back. Today that same vegetable is you are able to get at, say, 70 rupees per kg. Or because gold is the kind of very exciting thing for all the women and girls, gold 2 years back was available, say, at a rate of 60,000 rupees per 10 grams. Today it is costing us more than 1 lakh rupees for 10 grams. The buying power of the money is increasing, same 1 lakh rupees, right? Last year, 2 years back, you were able to probably get 15 grams of a gold, but today with the same 1 lakh rupees, you are able to get only 10 grams. Buying power of money is decreasing, is called as inflation. Yes, Deepa, you have some question.
Yeah, then why is gold not a great investment?
So I'm not saying gold is not a great investment. I was talking about FD. I'm yet to come on gold.
Oh, okay. No, I'm
I'm yet
just
to
saying
come on.
there must be some, I mean, why is it a bad investment in any case?
So Deepa, gold is not a really bad investment. See, when you make an investment, you create a basket of investment. You don't invest all your savings into one basket, one item. So 50,000 is my saving. I should not save complete 50,000 rupees in, say, real estate, or in, say, share market, in gold, or in FD as such. I need to create a basket of investment, and that is how I will get average returns. See, in investment, there is one very fundamental concept we need to be aware about. It's higher the risk, higher the returns, lower the risk, lower the returns. Fixed deposit has an extremely lowest risk. And for that matter, deposits into nationalized bank has a zero risk, but it has a very low returns also, right? Share market is little higher risk, but it has a very higher return also. Real estate is again little different kind of a risk with different kind of returns. So to balance your portfolio, to balance your investment folio, gold is still a good idea. And Deepa, over the period of last 40 years, the result says this, the data says that gold has given almost 12 to 13% of return, but is not a bad return. So gold is not a bad idea, right? Gold is not a bad idea. And even in gold, you can do this kind of a SIP. So every month you want to invest, there are a kind of, you don't need to buy physical gold all the time. There are electronic ways of buying gold. You can buy the gold units and all that. We can discuss it kind of latter part. It's difficult to cover over here. But yes, gold is not a bad investment. You can still invest in a gold, but longer period. See, please remember, if you want to have a good returns, higher returns, the investment should be for a longer duration. In 1 or 2 years, you cannot expect, say, 15, 18, 20% of the returns. So one is, as I said, higher the returns, higher the risk, lower the risk, lower the returns. And at the same time, if you want to have good returns, you need to invest for long term. You cannot expect a very high returns in a short term. Coming back to this example again. So we were discussing how Mukund can live his financial dreams and live his lifestyle in this 7.5 crore, and I want to show some beautiful magic and miracle of investment. As we said, talked about SIP, that is systematic investment plan. There is one more concept in investment called systematic withdrawal plan, SWP, through which you can withdraw systematically and still your amount can get growing. So just to give an example, if this 7.5 crore rupees today Mukund is having, and Mukund decides to withdraw 5 lakh rupees per month today from this investment, 5 lakh rupees, of course, is a good amount for anyone to live today, anyone to have a quality of life today in India, 5 lakh rupees. So in 5 lakh rupees, if he decides to do that, in a year's time, he will withdraw 60 lakh rupees. right? In 10 years time, he'll withdraw 6 crore rupees, and in 20 years time, he will withdraw 12 crore rupees, right? I'm just making some maths calculations. In a withdraw, he
Yeah.
will withdraw 12 crore rupees. So his investment was 7.5 crore rupees. He's today 40 years old. By the age of 60, he will already withdraw 12 crore rupees from that 7.5 crore rupees. I know you will have immediate question, paisa to 7.5 crore रुपया है, 12 crore कैसे withdraw कर लिया? It will go in negative. I will withdraw with 12 crore rupees, but I am going to show you the magic of SWP, that if he withdraw 12 crore rupees over the period of 20 years from that 7.5 crore rupees, what he will be left with. So just give me a moment to share with you another thing, that how this magic of SIP and SWP works. So I'm sharing you the screen over here, and it called as SWP, Systematic Withdrawal Plan. My friend, my cousin was having 7.5 crore rupees, because in this screen, I'm able to put figure only of 1 crore rupees, and not even 1 crore rupees, only kind of 7 digits I'm able to put. So here I'm taking example of 99 lakh rupees, say 1 crore rupees, right? 99 lakh rupees or 1 crore rupees. So if he invests 1 crore rupees, and if he withdraw every month, even 1 lakh rupees per month, 1 lakh rupees per month, we just need to multiply with 5, because we had taken example of 5 crore rupees. We'll just need to multiply it by 5. So at a rate of 15%, if he does it for 20 years, I'm just making it for 20 years, see the magic over here. He had invested 99 lakh rupees or 1 crore rupees. Please bear with me. I had taken an example of 7.5 crore rupees with Mukund, and we had taken an example of 5 lakh rupees withdrawal per month. But because this kind of a tool is restricting me to only 7 digits over in total investment, I'm taking 99 lakh rupees here, right? So we'll just see the magic with this 99 lakh rupees also. For a time being, we'll consider it as a 1 crore rupees. 1 crore रुपया उसने investment किया, and 1 lakh rupees per month he withdrew. So at the end of this 20 years, he withdrew almost 2.4 crore rupees, 1 lakh rupees per month for 240 months, 12 years. He withdrew 2.40 crore rupees. And you know what he has left with? He has still left with 3 crore 8 lakh rupees in his hand. Right? See this miracle, see this magic, that he already withdrew 2.4 crore rupees over the period of 20 years, and still he has left with 3 crore rupees in his hand at the age of 60, right? If I consider the same thing with here, I was not able to get the tool where I was able to get the amount of 7.5 crore rupees, so I am not able to show you. But point I'm driving here is I was making some math calculation, and that calculation was giving me the figure that in case of Mukund, if he was withdrawing 5 lakh rupees per month over the period of 20 years, he'll still end up having almost 90 crore plus. And you heard the amount correct. With the investment part of 7.5 crore rupees, he'll end up having amount of 90 crore plus at the end of 20 years. At the end of 30 years, I had taken an example of 30 years over there, because 30 years will make the calculation even different. See here, the investment of 30 years, if I say, take an example of withdrawing it for 30 years, he withdrew in 30 years 3.6 crore rupees, and he ended up having almost 9.88, mean 10 crore if he had. Point I'm driving here is, जितना period ज्यादा होगा, longer the duration, your returns would be more. So this is magic of SIP plus SWP. I think Deepa had some question. What is the lowest amount you can invest every month? It's as low as 100 rupees, Deepa. As low as 100 rupees. And my request to all of you who are here is, 100% you can invest this amount on your own. At the end of this session, I'll also give you the tools, few tools where how you can invest that amount in. Please start investing it and put it for a long term, right? And as I said, the risks would be little higher, because your returns expected are also higher. Where FD is giving 7% return, here we are expecting 15% plus return. But if you invest for a longer duration, say 6 years, 7 years, 8 years, 100% you will get a very good result. There is some context to it, why stock market or Indian economy will grow a very amazingly in next coming years. But due, as you said, it is a power of compounding of interest. It's a magic of compounding. And famous scientist Einstein told that power of compounding compounding is the eighth wonder of the world. We know seven wonders in the world, but power of compounding is eighth wonder in the world because it gives a magical result in that. So let me,
Actually,
how
there
much
are a few
time?
questions here. One,
Please.
someone has a question, what about taxes on the return?
Yes. Okay, so taxes on return in mutual fund is around 12.5% currently. So whatever investment returns you make,
Return.
and for a long term returns 12.5% returns taxes. And it's not as comparing to the regular taxes, because regularly in higher slab we have 30% tax. And if you add surcharge and kind of different things to it, it also goes to 35% who earns kind of a higher side of income. But still the tax on a mutual fund returns or stock returns remains to be 12.5%. Right? Rashmi, how much time we have?
We have another 15 minutes.
15 minutes. Okay. So friends, I have shared with the magic of investment, or for that matter, financially aware decision. And my, as I said, objective is to make you little more interested in knowing it deeper, make it excited to go little deeper into this aspect. And I'm time and again telling you that it need not to be highest earning member who will end up creating a good amount of wealth at the end of say 20-25 years. It is always a financially intelligent person who end up getting a good amount of wealth at a 20-25 years. So I have seen enough people who are earning good amount of money in their life, but always in a cash crunch, always in a financial turbulences, because they are not taking financially good decisions and end up being financially stressed. So that is the whole objective behind this SIP and SWP concept, to make you aware about. Because I was told that girls and
Pankaj,
women are. Yes, Deepa, please.
so there's a question whether you can, while you're investing, can you also withdraw at the same time, or how does that work?
So Deepa, see, investment is in two ways. One is and I'm restricting to mutual fund for it now for the sake of discussion.
Yeah,
So in mutual
yeah.
fund, you can invest in two ways. You can invest as a lump sum amount. Say I have 5 lakh rupees. I have invested 5 lakh rupees into that as a lump sum. Or two, I can invest as a SIP, systematic investment plan, every month. You know, so if I invested say in through SIP, so for my SIP to accumulate to a considerable amount, it will take time. So if I'm investing say 5,000 rupees per month, for in a year, my investment would be only 60,000 rupees, and there is no point withdrawing immediately from that 60,000 rupees. But if you invest some lump sum amounts, and that's what I did on my mother's name. Unfortunately, my father passed away 2 years back, and she had some money. So what I did is I invested that lump sum amount into one mutual fund, and that lump sum amount was 25 lakh rupees. And today she's withdrawing 25,000 rupees per month through that SWP. So you can certainly withdraw that amount. How much that amount to be withdrawn depends on you. If you withdraw the higher amount, say by investment of 25 lakh rupees, I withdraw 50,000 rupees per month, my investment will come down a little faster. But if I withdraw 25,000 rupees per month, my investment will still remain a very good amount. And at the end of the whatever period, 10 years of withdrawal or 15 years of withdrawal it is, you will still remain with a very good amount. So in my mother's case, what I did is from 25 lakh rupees, I'm withdrawing it 25,000 rupees, and I want to make it 35 or 40,000 rupees, because I want to enjoy the money for her. I don't want that money to be left with some good amount, say 15 years down the line. So for her, I'm withdrawing maximum amount. But in other case, if you have a considerable amount in your investment, you certainly can withdraw it. So through my mother, I'm giving a very good example that you can start withdrawing on day one if you invest a lump sum amount. If you investing through SIP, your amount needs to get accumulated to a significant amount, and then you can think about withdrawing. Hope it answers your question, Deepa.
Yes, it does. It does.
Super. In chat, I think.
I think there are a few more questions that are coming
Yeah.
up.
Yeah. So for kids education, I withdraw 2 lakh quarterly, as I do an SIP of 20K per month. Withdrawing as investment goes side by side. Yes, that's what I'm telling you. If you have invested a lump sum amount into that, you can certainly withdraw it. and use that amount for whatever purpose, kids education, kids wedding, or whatever this thing, so you certainly can do it. Thank you for that question, dear. And I request all of you to please ask the questions if you have any, so that I mean, your questions will be answered rather than I keep on talking what I want to talk. Okay. Now I'm shifting to something else very important. Here we talked about investment and how to create wealth. Another thing, another part of this discussion is why you need to be little alert or cautious as a woman or girl member of the family. As a family member, you as a kind of a married woman, you need to aware that what is the insurance amount of the earning member of your family. Insurance, of course, you must be knowing there are two type of insurance: life insurance and general insurance. Life insurance, as it says, it's on a life. If the person dies, then only you get that amount back as a this thing. Or there are certain life insurances wherein the maturity of that particular insurance period, still you end up getting some amount of money. So that is life insurance. In general insurance, what comes is say medical insurance, my hospitalization, if any, car insurance, or say fire insurance, and all those kind of insurances are into general insurance. Here I'm talking about life insurance. As a woman in the family, you need to know what is the insurance amount of the earning member of the family. So who should get a life insurance cover? Typically the earning member of the family should get a life insurance cover, because if unfortunately something happens to the earning member of the family, the living lifestyle of the remaining family doesn't disturbed, it doesn't get affected, and that's the reason the earning member of the family should be adequately insured. The underlying word is adequately, or properly insured. How much insurance amount should be? There are enough calculators, there are enough ways. I'm not going into that for time being, but he has to be insured. So we need to know once whether how much insurance the earning member of the family is having. One, who is the nominee? See, so what is the nominee? Nominee is the person who will get the amount in case of unfortunate death of the insurer. The person who has got insurance, unfortunate death of that member person who will get the amount is called as nominee. And as I said, third is insurance amount. Again, a practical case happened with me. One of my person who is staying in my society in COVID times, that girl got married recently for say 7-8 years, had two kids, and husband was very nice, very good. Unfortunately, suddenly he passed away, and he had taken the insurances. He had taken a good amount of insurance, but he had taken the insurance when he was a bachelor or when he was not married. So in all insurances, the nominee was his parents, and unfortunately he got died into COVID, and that lady is left with nothing, literally nothing. All the amount went up in the kind of parents name, and there were some unfortunate scenarios after the death of that person and all that. Not want to go into that, but you need to ensure who is the nominee, and whether the nominee is correct person or not. So that is one thing you need to know from your family. Second is there any borrowing on the family? Is there a home loan, car loan, or business loan? You need to be aware about. You don't need to kind of go into deep into that, but kitna hum pe karja hai? What is the borrowing we have? In case of the financial liability, what would be the liability we will have, right? Another very small thing is if there are any lockers that we have. I'm giving a very small and minuscule things. It might not feel even significant also, but I've seen me in 20 years of 25 years of practice that a person having a lot of this jewelry, ornament, cash amount, put it into the locker, and no one was aware about the locker details after he passed away. It has happened. And that's the reason I'm putting in front these small things, and I'll be sharing at the end of this session a sheet with the Rashmi and Deepa, who in turn will share with you all, wherein what your family should know. The sheet is all about what your family should know. What are the fixed deposit? What are the shares? What are the mutual funds? What are the different insurance amount in the name of earning member or in the name of family? And who is the consultant? Many a times what happen is we know that the husband has taken the insurance, but we are not aware through whom he has taken the insurance. Where is the insurance policy? Whom to approach for the claim in case of the incident? So very small things, but it can create a havoc in the family in case of certain unfortunate things. And the statement I had made in the beginning, you cannot afford to be financially illiterate. And these are a few aspects which can really hit you, that in today's world, you really cannot afford to be financially so illiterate. Otherwise, things will go haywire in case of an unfortunate situation. And my request to all of you who are attending this session, not only you, my request to is in your known circle, spread this awareness, especially in women and girl members, that please be financial literate. These are the different reasons why you need to be financially aware. um, and one last thing I'll immediately touch upon, because I think we are left with 5 minutes, and then if any question answers are there, I'll take on that. Today a survey had come, and you must been reading about different financial frauds, online frauds, and so many things here and there. Um, the survey came, and they said the category of people who are trapped to a large extent into these financial frauds are two major categories. One are the senior people, and two, women and girls. Senior people and women are girls, because they are not much aware about what is coming to us, what is being offered to us, and sometimes they get trapped into the whole scenario. Just will give a small example. Again, happened into the initial part of this year. In February, there was a very big scam happened in Mumbai, called as Torres Jewelry Scam. There was a company called Torres Jewelers, and what happened into that scam. I would just want to give you the perspective through which you will be aware about why this financial fraud happens. What happened into that is, that jewelry company had gave a commitment of a very high returns. So Deepa was talking about FD. FD today gives 7 to 8% returns, and there is something called Rule 72 I had written in the downside. I'll quickly touch what this Rule 72 is about. What is Rule 72? Rule 70 talks about in how much time your money will get doubled. And I'm telling you why I'm discussing this. So if someone says that I'll give you 15% returns, or I'll give you say 18% returns. So by 18% returns, if you need to know how much time it will get doubled into, you just divide 72 by 18. So 72 by divided by 18 is 4 years. You can immediately come to know that he's talking about doubling my money into 4 years. You understand this? And it's a vice versa. If someone says that मैं आपका पैसा 3 साल में डबल कर दूंगा, or if I'll double your money in 3 years, 72 divided by 3 years, he's talking about returns of 24%. 24%. So FD is today is 7% returns it is giving. So for FD amount, for me to get it doubled, how much time it will take? 72 divided by 7% means almost 10 years. Are you getting this? So almost 10 years it will get doubled to. You know what this why this Torres jewelry fraud happened? These people gave a commitment to investor that we will double your money in what time? They said we will double your money into 4 months. Into 4 months. Your FD is getting doubled into 10 years, and these people were telling that I'll double your money in 4 months. Now, all of you must be thinking, what rubbish? Who will invest in that? ऐसा थोड़ी होता है. But let me give you the truth of life. They have siphoned off money worth almost 1,000 crore rupees. Oh. And 1.25 lakh people invested into that. Can you imagine? 1.25 lakh mean. Why it happened? Typically a greed. People want to have use shortcuts to earn money. When everyone knows that पैसा 10 साल लगता है double होने को, if by through his FD, he's telling for, I mean, why anyone will ever work? People, banks will closed out if something like this actually happens. कौन bank में पैसा रखेगा? Everyone will invest with that. Friends, it doesn't happen like that. So please remember, I have put a very bold statement here, a few do's and don'ts I wanted to tell you, and the statement goes it like this. First statement: don't even trust God if he says, or if he gives you written commitment that I will give you more than 10% return. Please listen it very carefully. I'm saying don't even trust God if he gives you written commitment. Written commitment is a very important. If he gives you written commitment that I'll give you more than 10% return, does that mean we will not get more than 10% return anywhere? We were discussing about 15% returns in a mutual fund. Yes, you will get. but no one can gives written commitment of more than 10% is what I'm saying. No mutual fund, no SIP gives you written commitment, right?
Yeah.
So please understand, use this rule 72, use your intelligence, and don't be greedy. Don't invest in this nonsense things. And that's the reason women and girls are the most trapped people into online financial frauds. Few two three quick things, and then I'll end up and open up with the question answer. Don't delay your credit card payments. It hit you a lot. It ends up you paying almost 36 to 48% cost of that delayed payment. Don't delay it anytime. Don't miss your EMIs. What your EMIs you have, car loan, home loan, or whatever. Don't miss your EMIs. It disturbs your financial track record. It makes your financial record negative. And last and very important, if you're signing any financial document, understand what it is. You don't need to go into depth. आपको family member को you don't kind of irritate them. ये क्या है, ऐसा क्यों है, ये क्या है? But at least understand this is a kind of car loan document. This is a FD investment document. This is a home loan document. So at least you are aware आपके नाम पे क्या, what are the asset, what are the liabilities, क्या कुछ चल रहा है. Just try to get a little more idea about the financial different documents that you're signing. You know, end of it. There are very good tools for your expense tracking. Sorry for this spelling error. Walnut, Realbyte, Moneyfy, Good Budget are the different tools. You can take a screenshot of this if you want, you know. These are different expense tracking tools, your household expenses. And I'm sure you all are smart kind of women and girls. Today's girls and women are absolutely tech savvy people. So you can use these tools and simplify your expense or budget tracking and all that. And investment tracking tools, Grow, ET Money, Zero, and there are enough. I mean, I just taken 2 3 examples. I'm not saying whether it's good or bad. It is a good investment tools available, and a lot of people are using it. I'm not kind of promoting anything through that, but and there are even more enough investment tools which you SIP or mutual fund you want to invest it into. So uh, thank you, friends. I mean, tried giving you different aspects about this financial aspect and financial literacy. I'm okay if you have any questions to answer about. Over to you, Deepa and Rashmi, please.
Yeah, no, oh my God, that was great. Thank you, Pankaj. That was amazing. I know we're, a little over time, but I do want to give the audience the opportunity to ask questions if they had, there are a few that are on the
Yeah,
chat.
yeah. I'll
So
just take that questions, Rashmi, immediately.
yeah.
Going little above so that I'll
So
try.
one, I think Kusum here says that, how does SWP affect, the principal amount?
So, depend on how much you withdraw, Kusum. As I said, in my mother's name, I invested 25 lakh rupees. So, if I withdraw 25,000 rupees and I keep on withdrawing for a longer period. So 25 lakh rupees, I withdraw for 2 years and I immediately withdraw the principal amount, then everything is gone. But if I keep it for 10 years and withdraw 25,000 rupees, so I'll end up still having a very good amount at the end of year. If this 10 years can become 15 years, 20 years, larger the period, larger the amount you will be left with at the end of it. So yes, it will affect your principal a little, because if you're withdrawing money at the end of the day, right? You're withdrawing from your investment, but it will not vanish if you're withdrawing the considerable amount and keeping it invested for a longer duration. I think someone is asking, so in your cousin's case, he did SWP after 20 years of investing. Yes, after 20 years of investment, because he kept on investing till the time of his financial retirement. I will not say active retirement, financial retirement. He kept on investing till the time of his financial retirement. And because he has taken a retirement, he doesn't have other source of income because he stopped being partner into his business. So he doesn't have other earnings or regular income as such. So he started withdrawing from that investment amount, the accumulated wealth that he has created. And after that, he's now he'll be using it for whatever the rest of the time and all that. So in your mother, okay, I think in your mother's case, withdrawal was after how many years? So I mean, in my mother's case, what I did is I invested lump sum amount. I invested lump sum amount of 25 lakh rupees, which she got after my father's demise through some different sources. And I invested that lump sum amount of 25 lakh rupees and immediately started SIP, SWP, sorry, immediately started SWPs with. Devian is asking if you have already invested a
I
certain
have,
amount in bulk.
yeah.
Yes, yes, Deepa.
Yeah.
You're saying
So
something, Deepa, or shall I
typically,
take the question?
Yeah, I have a question. Typically,
Please.
how much percent of your earnings should you be investing? Because I
Oh,
mean, I
wow.
know
Very
that
interesting.
you don't like save what is left of spending, but you actually invest and then the rest you spend, right? So what amount would
Absolutely,
you?
Deepa. Absolutely.
Yes.
I mean, it's a really wonderful question. And see, it depends on what stage of life, Deepa, you are at. Because, see, I'm putting it a different perspective. We should not affect your lifestyle also in the kind of this thing of investment. We have to have a decent lifestyle, and that is what we are earning for. Right now, we cannot kind of keep on kind of putting everything into investment and suffering through my lifestyle. So, at what stage of life you are at? So, there are different ratios. So, the one is kind of uh, 40% you should invest is what they says if you are in early stage of your life. So if you are, and again depend on your earnings also at the end of the day, because if someone is earning say 50,000 rupees a month and having a family of 5 people back at a home, it's difficult for making a savings and that. So what earnings and what stage of life, what is your family background, it depends on that. But as you said very correctly, you should, what out of your earnings, you should manage your all expenses as best as possible and save maximum amount. But two very important aspect about saving and investment: save consistently and for a longer duration. Why Mukund could create that magic is he invested consistently for 15 years, didn't take a break, right? And he invested for 15 years, longer period. If it did have been 20, 25 years, this amount would have kind of given almost 3x, 4x returns. So invest consistently and invest longer period. And depending on what stage of life you are at, what is your family background, try to investment maximum. There is no kind of a one thumb rule that you should invest 25% or 40% or 60%. I know few clients who are at that stage of life, they invest 90% of their earnings because everything is being taken, right? It depends on that. Hope I answered
Yeah,
this
there's
question,
actually
Deepa.
a really interesting question here. Um,
Yeah.
you know,
So
for parents over
Devyani is having one
70,
question, Rashmi. I think I'll take that question
yeah,
and then
Devyani's, yeah.
yeah. So if I have invested a certain amount in bulk in mutual fund, and if I have a withdraw certain amount, does it affect overall perf? I think I answered that. Sorry. So as I said, I mean, depend on how much amount you withdraw and how much amount you keep it invested for. So yes, over to you, Rashmi and Deepa.
Yeah, no,
I
so
think
the other one here is, for parents over 70 who still think only FDs are the way to go, what's the minimum number of years to invest for, for in lumps, I suppose, before withdrawing, considering taxing?
So you are saying how much the period we should withdraw in say mutual fund or stock market, is that so?
Yeah, I think, her question here is really, like what's the minimum like lock-in
Minimum.
period or
So it's say as simple as that. I mean, for your long-term needs, you should invest for long term,
yeah. But in this case,
right?
given that the parents are, older, like how does that sort of impact? Because obviously they don't have, the luxury of, the time, correct?
Correct. So Rashmi, that is where I took an example of my mother. So she's 75 today, 74, 75. So what I'm doing is I'm invested that 25 lakh rupees on her name, and I'm withdrawing today 25,000 rupees, which I want to make to 35 to 40,000 rupees per month, because here I'm not bothered about having some amount at the end of the period. Here I want her to enjoy everything. But if it would have been my life, in my case, today I'm say 48 old. In my case, I would have withdrawn say 25,000 only. I would have withdrawn probably even less depending on my need. And I would have kept on for a longer period, because at the end of it, I still want to have some amount in my hand at the age of 65 years. right? So in parents case, they did not to bother about investing. In fact, they should enjoy the withdrawal part of it, and they should withdraw as much as possible for next say 10 15. So in my mother's case, I have planned for 90 years, 90 years. Of course, I am there to take care of them, right? But these people are kind of, they want to have their own money.
Yeah.
अपने पैसे से मेरे को enjoy करने का kind of. So that's the reason I have kept her for 90 years.
Yeah. No, that's so important.
And
And, you know,
in keeping that 90 years or 15 years, I am planning her to. Yes.
sorry, I think you broke up there for a little bit, but
Okay. Yeah, so that's how I'm planning for my parents, is what I'm saying.
yeah. No, I think that's great. You know, with taxing even for seniors, you know, does it still work the same way when you're doing your SWP?
Rashmi, in fact, there are a few more benefits also. So my request to all of you is, I mean, let us not get things little more complicated. So taxes are not that much. Let us focus on investment and returns of that. So for example, if I getting say 1 lakh rupees return, the taxes would be 10,000 rupees or so on the withdrawals. So, I mean, let us focus on the investment and getting maximum returns. I mean, to make it even more clear, for time being, we can ignore the taxes also till some time. You know, because taxes are 10%, not like a 30-35% in a regular earnings case. So for time being, even let us withdraw, because I mean, if you start looking at it through so many different aspects, thing might get little complicated, and we might probably prolong the decision or delay the decision. For time being, we can even ignore the taxes, because it's not very significant as such.
Right. And taxes only kick in when you withdraw, correct? You know,
Exactly.
as long as you're, you know, you're in SIP situation, you know, you're only accumulating wealth versus, you know, on the latter. But yeah.
Absolutely.
Does
There's
the
one more.
market status affect SWP since the return on principal amount gets affected?
100% Kusum, 100% it gets affected, because say if the market has gone down, so your mutual fund unit value will also get down, right? So say today the mutual fund amount is 100 rupees, mutual fund unit value is 100 rupees, and I'm withdrawing 20,000 rupees. So I'm withdrawing 250 units every month. You know, now if this mutual fund value, because market goes down, becomes 80 rupees, I might end up withdrawing 300 units. And it will, of course, impact my principal. That's the reason I said we need to keep it for longer duration, so it gets averaged out.
Yeah.
Yeah. Yeah, you know, a couple of things that, you know, I know we've gone over, you know, some of those questions. Couple of things that, you know, like I was curious of, right? Especially for, you know, investing, you know, in you know, someone who's in their 40s or 50s, you know, is it too late to start, you know, investing? What's the right time? What's the right mechanism? You know, is SIP the right thing, or should I just take all my, you know, money and go put it in, you know, a mutual fund? What advice would you have?
I can imagine people who are kind of in their late 50s or 60s will have little FOMO through this discussion, whether I missed out on what. But again, say the fundamentals is you should be invested for longer duration. It's irrespective of your age, right? So if you are 50s, if you are still able to remain invested for say 8-10 years, yes, you should go into that. If your horizon is only 2-3 years, I would suggest you to avoid investment in mutual funds or share market for that matter. Only if your horizon is more than say 5 years or 6 years, you think about share market or mutual funds. In lesser duration, better you avoid and go for some safer kind of options, you know.
Yeah. You know, I think there's a question here that says, you know, how do you know which mutual fund is a good invest in?
So, I mean, that is a very good question, and that can be another at least 2 to 3 hour session.
Yes.
We'll have to
But
do a take two.
yeah, but to give you immediate answer to your question is, see, there are different mutual funds, long-term mutual, I mean, large cap mutual funds, small cap, mid cap, multi cap, flexi cap, and so on and so forth. Which mutual fund to choose depends on your risk taking capacity. right? If you are in an early age, say in 20, 25, 30, you can invest, you can invest in a little riskier returns. If you are into 50s or 60s, no point making investment in the riskier investment, because your principal is important, right? And okay, through this discussion, I want to make a very important statement. Whatever stage of life you are at, if you are a married woman and if you have kids, my request is make your kids aware about starting investment early. That is extremely important. Extremely. Starting investment early. It can be as early as 16 years. Make them start investment through their kind of pocket money or through the money that they get on their birthdays. 100 rupees is the amount you can start investing per month. So they can start investing from say 13, 14, 15 years of age also. And they enjoy it a lot. I'm doing it with my kids. They have their kind of app with you. My 100 rupees has become over the period of 3 years, say 3,600 investment, and my investment has become 5,200. Now for them, it becomes a talk of discussion in the family. Mera investment 5,200 ho gaya. And they enjoy it. So start this habit in your kids for sure, without fail. Early investment for a longer duration. So I think I have answered Devyani's question, how to know which mutual fund to invest in. Rad is asking approx market cycles going up and down in years, so we can plan. Yes, I mean longer duration, it goes up and down, up and down. So that's what it said. Share market in last 20 years, or it has seen lot of recession, lot of kind of ups and downs, but over the period of 20 years it has given 15% returns through all these ups and downs, because it gets averaged out.
Yeah.
Right?
Yeah,
Thank you, Red.
that's
Great idea.
awesome. I know we have a few other, things that that I made a note of here as you were talking. One of the things that you talked about is obviously, having that you'd share the list, but, having that conversation, right, with our family members about, setting sort of those financial boundaries, or, knowing a little bit more about, where the finances are, because, there are some women, including in my household, where, there are decisions on money was not, as forthcoming, right? Whether it was, my dad, because that's just the way they knew, right? I mean, not my dad's no more, but he did instill in us to be financially independent, which I'm super grateful for. But that said, those discussions are very difficult to have. Do you recommend, a certain way to approach this, or what's the best way that you've seen, like maybe your clients have, sort of approached it before?
Rashmi, unfortunately, to answer to this is a little difficult scenario, because unfortunately in some families, male members doesn't only encourage females to get involved into this. It's an unfortunate scenario. They don't encourage, and that's how even if they're little interest, the woman in developed into that, it gets killed. So my request is you start learning a little about this thing. So I'll give you example of one of my friend, and she did that course of that startup that has started. So earlier she was not part of any discussions of financial matters in the family. She did the course. She started knowing of mutual fund, what is monthly return, what is CAGR, what is the kind of mid cap mutual fund, what is small cap mutual fund, and all that. And one day it so happened that her cousins came and they started discussing something. She became part of it, and she started something which probably few of their cousins were also not aware of. And everyone kept quiet, and they started, listening to her. And that gives us such a beautiful feeling that everyone is listening to me in this financial aspect. And she was talking sense. And through that, now she's handling her whole family's financial matter. Her kind of in-laws and her mother's part also, all mutual fund and investment she's handling now. So my request is you please take a little knowledge. Don't give up.
Yeah.
Don't give up is my request to all of you. Keep on consistently going through it. Keep on learning, keep on doing it. One day it will come that they'll fall back to you. Today my all investments are being handled by my wife, and she's a housewife by that matter. I mean, she's a homemaker and she's handling everything. I'm not aware about any of my investment, and that can come to every one of us if you take little more interest into that, and don't give up.
I love it. I love it. The other is,
Rashmi,
I know we
allow
kind of
me,
talked about this briefly. Sorry, go ahead.
if you allow me, I want to take 30 more seconds and give you more very interesting and different aspect,
Yeah.
So this financial literacy is not about you or your family or your kids. You can do a very big financial service, social service through you being financial literate. How you can do that, you will have your maids at your home, you will have your watchman at your society, you will have your driver, and today the biggest challenge in lower income strata of India is, they are not able to know how to manage their funds. I mean, they don't know, of course, all this wealth creation and all that. For any financial need, say medical need or marriage needs or all that, they go to money lenders. They buy 10,000 rupees from money lenders. And you know how much they charge? Today, our bankers charge 9% per annum for 12 months on your home loan. How much this money lender they charge,
True.
9% per month,
Yeah.
108% per annum. So they keep on repaying. I have seen so many people, they keep on repaying that 10,000 rupees for say last 5 years, and still that 10,000 rupees not has become 8,000 also. You can make them financially aware. You can make them talk about this 200 rupees kind of investment into SIP. It's not difficult for them to make that investment of 100, 200 rupees. If they have 10,000 rupees accumulated in your hand for any kind of emergency, I'm sure they will not go to this money lenders. They will become financially independent. You can tell them about starting investment. Immediately they have got a girl child, so that by the age she become age of marriage or age of education, they'll have good amount and small investment, 50 rupees, 100 rupees. That is a cost of say one samosa or two samosas, and they can certainly make it. So all these people around you, watchman, driver, maids, gardener, you can make them financially independent or financially aware through you being financially independent, and you can do a very big financial service through that. So I wanted to bring this aspect also to the whole discussion.
Yeah, no, that's
Very beautiful.
that's beautiful to be able to, educate others as well, right? Yeah. And one of the things that Rad mentioned here, I think it's so true, right? The Indian family, like, to talk about insurance and death is so difficult. I know we had this conversation earlier. Like, it's such a taboo. Like, who talks about, like insurance and, even to find out, hey, am I the beneficiary? Or the nominee on that, insurance, they're like, what are you talking about? It's sort of almost looked upon at, right? Like, so, those are really hard decisions, and conversations to have, amongst family members. I suppose, having sort of that checklist would be helpful. But what advice would you have for, to broach that topic?
Honestly, it's difficult to answer it. Depends on a family to family. But my request or my urge to all of them is at least know that you need to be aware about it. It might take little time to make them comfortable to discuss about it. You can start discussion from say investment perspective. You can start, and I'm sure all of us has someone or other in say COVID times, as Rashmi you said, in yesterday's crash or in some different phases where we lost someone near and dear, and family has suffered a lot. So you cannot start the whole discussion with this incident, or with this topic, but slowly you can develop this topic. You can talk about investment, you can talk about kids education, you can talk about money for your kids matter and kids education, and then slowly probably bring this topic on the table. And I'm sure today even everyone is aware, everyone is knowledge, so almost 50 to 70% of the people won't bother about it, won't but at the end of the day, whatever is the situation in the family, you need to be aware. Please know that. They will feel bad, they will feel bad. And it's not for a good discussion for us too. It's not a very kind of exciting discussion for us too, but it's a part of life. The only thing that is certain in a life is death. We all know that. We all going to kind
Yeah.
of leave. And
Yeah.
what is the I mean, we need to develop this. But you need to aware at the end of the day, how whatever is the matter, howsoever you achieve it.
No, 100%. I think, it's to be able to be sort of sensitive, with the topic as much as it is, and take that step, right, and have that conversation. That's great. Kusum basically has a question here saying, are there any sites or platforms where you can learn more about this other than YouTube? I know you had shared a few, on your slide deck.
So these are tools. Those are tools, Rashmi. Those are not learning tools. Those were kind of
Okay.
expense
Or you
management
can
or
take action on them.
Yeah,
uh, uh,
I also wanted to just bring to our audience that if anyone's interested to learn more about, the finance, this financial literacy, uh, Pankaj himself is going to be able to take a course. So you all can show your interest or let us know, and then we can organize a workshop sometime. So based on how many people are interested.
Yeah, so there's also a question here in the Q&A. What kind of investments, safeguards, to keep in mind for women before getting into an arranged marriage? Women earning well is only the breadwinner for aged parents, has investments and insurance. Example, nominee should be parents, anything else, I think is the question.
so I think it's about a woman who is getting into arranged marriage, is it? Is she still
Correct.
getting yet to get married and about to get into arranged marriage
Yeah,
and want to take care of her parents too?
correct.
Right. So, what you can do is again, I mean, if you want to take care of your parents, and if you want to make a recurring, again, lump sum investment and recurring investment, monthly investment, regular investment, So, if you have some lump sum investment, I mean, you can invest it in your name, and your parents need to be nominee in that case. If your intention is to take care of your parents for that, and in case of your recurring income and monthly investment you want to make. Again, I mean, from monthly investment, it's difficult to withdraw something immediately and through that withdrawal take care of your parents. But at least you should ensure that the nominee is need to be your parent. Nominee need to be your parent in that. And in that case, you need to get insured. Please understand that if your parents are dependent on you, there is people have some kind of
Mm.
strange ideas about insurance. I mean, husband and wife is there, husband is earning and wife is feeling bad that why you're not taking insurance in my name. I mean, sister, you are not earning. There is no point taking insurance in your name. There is no point spending that amount in your
Yeah.
name. And I mean, we have such a weird financial concepts. Some of my clients tell, sir, people. I mean, he was asking me, sir, you are asking me to pay fine life insurance premium for last 15 years. अभी तक तो एक बार भी use नहीं हुआ है. It did not get used anytime. I said, life insurance not get used is a point to celebrate. It will get used only when you die. So the whole intention is it should not get used. So it's a point to celebrate. It's not point to cry or it's not point to repent upon. So here you need to insure yourself because your parents are dependent on you. So that is the
So she has a clarifying, she's clarified that the question is not about how to take care of parents, it's about how to keep monetary safeguards before getting into an arranged marriage.
So simple as that. If you have some investments or whatever kind of monetary aspects you have in hand as of now, make it in your parents' name. Don't keep it in kind of your name because sometime after marriage situation can become little difficult. You can keep it in your parents' name and anything in your name if it is there, and through that if you want to make your parents benefit out of it, nominee or the returns part of it, you can kind of shift towards your parents. So that is how you can take care of it before getting into arranged marriage. I mean, all the financial investment you have, make them nominee or make them owner of the investments.
Are you able to do percentage ownership?
I don't know
Like,
if she's talking about joint account, if that's her question. I mean, if as long as the account is only on her name, what is the safeguard that she's talking about? Nobody can access your money, right?
Absolutely. Absolutely. So even if after you are getting married, your money is your money. I mean, you can always do whatever you want with your own money.
yeah. I like Rad's thing saying get into a prenup, which I don't know how much, it's caught up, but in India especially, but, I'm sure that's that's also a great way to, sort of have sort of guardrails, right? But yeah, uh, great. I mean, this was obviously amazing. If I don't see any new questions, and I know we've gone over. I want to be respectful for your time as well. Pankaj, this was great. Thank you so much. I mean, I've learned so much, and not just about SIP, but also SWP. So something I am going to further, look into as well. Again, thanks for everyone who joined. Remember, I do want to, leave everyone, especially the audience, with one thing. If you haven't, education is one thing, awareness is one, but it's those small steps that's actually going to get you to that independence or freedom or whatever it is that you associate money or finances with. So I would urge you to take that step, even if it is 100 rupees that you're putting away, or 1 lakh, whatever it is that you're able to, and whatever position you're in, be able to take that step. I think is take that action. I do want to leave you behind with that. And one of the other things is you'll get a short feedback form after this session. Please take a moment to fill that out. It'll help us greatly, to know that, we're providing value and we're bringing value to you guys. I also invite all of you to join our private community on Facebook. It's Flow with Sira. There's an inner circle, as well as we're on Instagram at Flow with Sira. So definitely stay connected with us. We'll be sharing a recording of this session. It'll also be available on our channel. Again, we're going to have our next session coming up in July, and it's going to be about wellness. So bring a friend, get a sister, your colleague, because we as women are really here together. As we grow together, we're going to rise together. With that said, Pankaj, thank you so much.
My
It
pleasure.
was great. Thanks, everyone.
Thank you, Pankaj. Enjoyed the session. Thank you so
Thank,
much. Bye.
thank you so much, Rashmi, for the opportunity, and enjoy the weekend. Thank you so much. Thanks.
Yeah, thanks.
Thank you.